Okay, good evening, Mr. Lau, Dr. Lau. Today we are going to present on the presentation for the investment analysis ACT4221. Okay, my name is Sinniah and my matrix number is EX03532.
Yes, hello doctor. My name is Muhammad Amirizan bin Muhammad Razip. My matric number is EX03447.
My name is Goh Bee San. My matrix number is EX03479.
My name is Chen. My matrix number is EX03468.
My name is Leow. My matrix number is EX03486. I will present the company background. MICSC Berhad was established on November 6, 1958, and it is the best international container liner shipping company. In September 2005, Malaysia International Shipping Co. Ltd. adopted its existing corporate image and changed its name to MISC Berhad. Its main shareholder is Petronas. The Malaysian National Petroleum Corporation. In year 2013, MISC Berhad and Victor Group, through their subsidiary VTTI BV, formally launched the first oil storage terminal of a joint venture in Southeast Asia. MISC successfully provided a semi-submersible floating production system. Therefore, AET successfully completed the world's modular capture ship, the Eagle Texas. Industry overview and release. The Malaysian Shipping Group MISC Berhad, a subsidiary of Petronas, planned to expand its business to the Atlantic region, with goal of driving of 20% profit growth in the next 3 to 4 years. MISC focused on the shuttle tanker business in the North Sea area around Norway, and the LNG ship business from the United States and Canada to Europe. MISC also trying to expand the offshore business in Brazil. AET Tankers, a subsidiary of MISC, won a long-term charter contract from Brazil Shipping I Limited, a subsidiary of Shell, to order and lease 3 new Swiss-type dynamic positioning shuttle tanker. The total value of the charter party is approximately US 245 million and is expected to begin in 2022 for operation in international and Brazilian waters. MISC point out that this long-term contract will further consolidate AET's position as the world's top international oil transportation solution provider, as well as its leading position in the dynamic positioning shuttle tanker market. Now I will pass to the next presenter.
Thank you, Leow. Now I will be presenting on the financial performance analysis on MISC Berhad. Okay, we have calculated the ratios for the performance area, which covers the liquidity, activity, leverage, profit, and profitability, and the market ratios. This covers the period from 2015 to 2019. So the ratios that we have calculated on the current ratio, quick ratio, inventory turnover, average collection period, average period payment period, total assets, debt ratio, and debt to equity ratio. Also on the profitability side, where we have calculated the gross profit margin, net profit margin, and operation margin, and the following until the PE ratios. Okay, on the current ratio and quick ratio, it's based on the industry average. MISC is in a good shape in terms of liquidity and able to cover its short-term obligation using most of its liquid assets. On the inventory turnover, MIC managed to roll over its industry by 29.9 times in 2019. This means the company managed to convert its inventory to cash or sales. On the collection collection and payment part, MIC payment collection and payment made to vendors is at an average of 120 to 160 days. This shows that the company have to improve in collection performance by introducing new initiatives such as discount rate to the customer and tighten the credit policies. On the asset turnover, the ratio was low, means for one ringgit, the company managed to generate only 0.1 cents sale. Compared to the industry average, it is more at a moderate level. So on the debt ratio and the debt to equity ratio, the debt ratio increased and it shows a rise in the company's borrowing level. It increased from 30.16% in 2018 to 31.06 in 2019. For the debt equity ratio, it increased from 36.92 in 2018 to 37.87 in 2019. This shows that the company is getting more of its financing from borrowing rather than equity. So on the gross profit, net profit, and operating profit side, the result of the profitability ratio shows that it is at the optimum level and has increased since 2015 through till 2019. It's an increase from 27% in 2018 to 30.65 in 2019. The net profit increased from 14.63 in 2018 to 16.02 in 2009, but it decreased compared to 2015 and 2016. This may be because of the cost of borrowing that they have started to pay since 2017. So the operation profit increased from 4.83 compared in 2018 because the operation expenses have been improved. So now on the EPS, it dropped since 2017 and settled at RM32 per share in 2019. On the returns on asset and return on equity, the ratio stated a slight increase in 2019 to 2.77 and 4.14 respectively. So on the PE ratio, the PE ratio stated the highest in 2019 at 0.26 times compared to the prior years. The higher PE ratio creates a greater confidence in the investors. So okay, now I'll be presenting on the evaluation of the financial strength and weaknesses of MISC. We have chosen the Malaysian bulk carriers Berhad as the benchmark for the comparison against MISC Berhad. In terms of revenue, MISC have a high volume compared to MBC with a RM 8962.7 million against RM 257.99 million. In terms of operating profit, both companies generated a high profit in 2019 compared to previous year in 2018. But since MBC had have to bear a high financial cost, which is 29 9.37 million, the company ended up in a net loss of RM7.3 million in 2019, whereas MISC made a net profit of RM1436.3 million. The level of gearing ratio and net debt to equity ratio very drastically high, with 158.3% and 78.2%, which is considered very high compared to industry average. Even though the level of borrowing has reduced from 409.2 million in 2018 to RM356.8 million in 2018, but still it reflects a bad result in terms of financial. MISC, in the other hand, the gearing ratio improved from 20% to 80%, and net debt to equity ratio shows a 17%, which is the moderate range in the industry average for leading shipping company. MISC paid dividend for their investors consistently past 5 years at 30 cents per share, with a special additional 3 cents in 2019, whereas MBC did not propose any dividend payment for its investors in 2019. The share price for MBC dropped to the lowest in past 5 years at 55 cents, whereas the share price of MISC was at 8.35 at the closing of 31st December 2019. So with this, I conclude my presentation, and I'll pass to Goh for the next, to continue with the presentation. Thank you.
Our group are choosing price earning ratio to calculate this company fair value. PE ratio is related an organization offer cost to its profit per share. When there's high PE, stock overvalue, we call that at development stock. And when PE ratio is low, stock underestimated, and we call that as world stock. When high PE ratio, high stock cost also related to the income. And when low PE, low stock cost, which related to their income. Next, please. Yeah, this is the equation for PE ratio. PE ratio equals to market value divided by earning per share. That's all from me. I will pass to the next presenter.
I'm a next presenter, Muhammad Amirizan. The decision on analysis, we propose to invest in the stock at the current market price of the MIC's company. Okay, for the first, in our assignment, we choose to decide to invest the stock at the current price because of the financial performance analysis and the factor fundamental and factor technical and market sentiment. Okay, like Goh say that in a calculation and with a Sinniah present, so we see the financial report and financial analysis. So the MIC stock is we can consider at a good graph. So we should invest if we have we want to tell to the investor. Okay. Okay, for the okay. All right. I will present to you the factor. Okay. In the investment analysis, we must know the market forecast and know the potential driver that may specifically move the stock price in the short term and the long term. There are three factors that we find in our assignment, which is fundamental factors, technical factors, and market sentiment. Okay, for the fundamental factors, we can see in an efficient market, stock price will be determined primarily by fundamental, which at the basic level refer to a combination of two things, which is an earning base, such as earning per share, EPS, and a valuation multiple such as a PE ratio. An owner of a common stock has a claim on earnings, and earnings per share (EPS) is the owner return on his or her investment. When we buy a stock, we are purchasing a proportional share of an entire future stream of earning. That's the reason for the valuation multiple in the price we are willing to pay for the future stream of earning. Part of this earning may be distributed as dividend, while the remainder will be retained by the company for reinvestment. We can think of the future earning stream such as function of both the current level of earning and the expected growth in this earning base. Fundamental factors drive stocks price based on a company earning and profitability from producing and selling goods or service. For, uh, for technical factor, we can understand that technical factor related to a stock price history in the market pertaining to chart pattern, momentum, and behavioral factor of the trader and investor. Okay, thing will be easy if only fundamental factors set stock price. Technical factors are the mix of external conditions that alter the supply of a demand of a company stock. Some of these indirectly affect fundamental. For example, I give to you, economic growth indirectly contribute to earning growth. Okay, so technical factors include about inflation, economic strength of market and peers, incidentally transaction, demographic, liquidity, and trend of stock movement. For stock movement, often a stock simply move according to a short-term trend. On the other hand, a stock sometimes behave the property boys the stock higher. All right. So knowing that stock are trendy does not help us predict the future. All right. For the question of the how we want to pertaining the risk to support our answer at the graph. So risk management is a crucial process used to make investment decision. The process involves identifying and analyzing the amount of risk involved in an investment and either accepting the risk or mitigating it. Some common measures of risk include standard deviation beta, value at risk, and conditional value at risk. Standard deviation measures the depreciation of data from its expected value. Okay, for the we explain the risk of the standard deviation. Okay, the standard deviation is used in making an investment decision to measure the amount of historical volatility associated with an investment relative to its annual rate of returns. Okay, so it indicates how much the current return is deviating from its expected historical normal returns. Okay, for example, a stock that has high standard deviation experience higher volatility and therefore a higher level of risk is associated with the stock. Okay, for other risks, we can see is a beta. Beta is another common measure of risk. Beta measure the amount of systematic risk an individual security of an industrial sector has relative to the whole stock market. The market has a beta of 1 and it can be used to gauge the risk of security if a security beta is equal to 1. So the security price move in time step with a market. A security with beta greater than 1 indicates that it's more volatile than the market. So these are the risks that we propose decision and understand the investment risk will affect the performance of the gain in the dividend when invest in a company portfolio. Okay, that's all from my parts. Then I will give the next presenter to present.
Okay, I will present the similarities or difference financial performance analysis. Okay, I will choose the 5 analysis to present. Like the first one is the current ratio. For the NISC company perhaps have a good current ratio due to the company current ratio on June 2020 is 1.88 times better than the December 2019, that is 1.44 times. Okay, that means the good ratio is between 1.2 times to 2 times. That means this company is a good ratio, so they can more than current asset to cover their liability. Okay, if the company is not good current ratio, that is below the 1 time, means that the company doesn't have enough liquid asset to cover its short-term liability. Okay, for the second one is the inventory turnover. This company in June 2020 is 16.66 times. That is worse than the December 2019 is 2029.90 times. Okay, this one is the better since the high inventory turnover. It means a company that can sell a good quickly, and there is a considerable demand for their product. So for the next one, financial analysis is the debt ratio. The debt ratio is means for the company in 2020 is 35.33%. That is better than the last year 2019 is 31.65%. Okay, this means the largest the debt ratio, that the greater is the company financial leverage. Okay, for the number 4 is the net profit margin. For this company in this year, June 2020, it lost 20.41%. But the last year is profit 16.2%. So for this company, MISC Berhad, that is profitability last year is better than this year. The profitability is important, determining the value of the company, So for the return of equity, the company on this year, June 2020, is lost 2.75%. And for the last year, 2019, is profit 4.14%. So this means the higher ROE, the better the financial company can be a result of high financial leverage. So that means this company on this year, the decreased profitability compared with the last year. So my part is finished. I will pass to the last presenter, Sinniah, to continue the presentation for the conclusion.
Thank you, Chen. Okay, with this, we are going to conclude our presentation. In conclusion, our recommendation would be to buy the share, the MISC share. Based on the analysis above that, we have calculated the ratios and the fair value and the other information that we have presented. There are both upsides, continuous payment of dividend, and also future capital appreciation on this share based on the company's performance. So we recommend the investors to buy MISC share. So with this, we conclude our presentation. Thank you, Doctor. Thank you. Thank you.
Okay, that's all for our presentation. So we'd like to say thank you to Doctor who